So our question for you is, what are the tax responsibilities, the key tax responsibilities in both countries for US expats moving to the UK, and how can you avoid issues such as double taxation?
Thank you, Alice. Right, so I haven't got any slides this afternoon. I started to prepare some, and by the time I got to the 10th slide, I realized I'd be talking for hours and hours. So today's talk comes with a huge caveat. When you're thinking about moving to the UK from the US, make sure you go through a complete UK entry planning exercise. Get the right advice from a tax advisor, from an investment manager, from whoever you're going to use to do your FX, like David, for example. It's really important because what I'm about to tell you today is not the complete picture. I could have spoken a day alone just by myself, just talking about some of the key points from a tax perspective. So I will really focus on the specific question I've been asked today. And it might not be exhaustive, but I think it will be helpful. So with regards to your US and UK tax reporting obligations, when you move to the UK, if you're a US citizen or a green card holder, your obligations to the IRS and the US don't go away. You continue to have to report and file US tax returns and declare your worldwide income in the States. You will probably continue to file a federal tax return. You will have an obligation potentially to file a state tax return, and you might have some new obligations too. For example, once you have assets overseas, like foreign bank accounts, there's a new form that you have to complete, which is referred to as an FBAR. It's a foreign bank account reporting form, which you will need to complete every year. There are other forms too, depending on what overseas interest you might have, for example, overseas trusts, non-US companies. All those forms need to be filed and dealt with the IRS on time. Otherwise, there are some quite significant penalties that could apply. So just bear that in mind. Now, when we're thinking about submission of US tax returns after you've left the US, you'll all be well aware that the tax year for US purposes is the calendar year. Typically, you would file US tax returns, pay US tax by the 15th of April if you're in the US. Now, if you're actually not in the US, you're in the UK, you get an automatic extension to your filing deadline to the 15th of June. And then there are further mechanisms to extend that even further. So 15th of June is automatic. You can extend your filing date further to the 15th of October, and you can extend once again to the 15th of December if you need to. If you're going to file past 15th of June, it's important that you file extensions to do that. Otherwise, your tax return will be considered late. If you file your US tax returns late, penalties will apply for the late submission. They can get quite pricey. So if you have a tax liability and file late, penalties could rack up to 25% of your tax liability. You still have an obligation to pay your US taxes by the 15th of April if you have a US liability. So you need to work with your advisor to estimate what your liability might be and to pay it on time. Otherwise, again, there's late payment interest and late payment penalties which might apply. So it's important to get that right. You're as an American in the UK, you're going to have a dual filing obligation, which is why you have dual UK US experts in the UK, because we can navigate the complications of the US alongside the complications of the UK. You will also have a UK tax filing obligation. Unhelpfully, our fiscal year ends on the 5th of April for some odd historic reason. So the UK's tax year and the US aren't coterminous. So there are some reporting positions to navigate there. But very simply, you're required to notify the UK tax office that you have an obligation to file a tax return. So unlike the US, not everybody in the UK files a tax return. You have to recognise that you might have an income tax or a capital gains tax liability here and register yourself to file a tax return. You're likely to become UK resident on the date that you move here from the US. So if that was today, that's during our tax year ended 5 April 2025. So you'd register to complete a tax return for the year to 5 April 25. Filing deadline for that tax return is going to be the following 31st of January. So year end 5 April 25, you would file your tax return by the 31st of January. As an American, we generally recommend that you file sooner than that, because I'm going to explain in a moment some of the areas we need to manage for double tax risk. Knowing your liabilities, filing early is really important as an American in the UK. Like the US, in the UK, if you don't file on time, if you don't pay your taxes on time, there are interest charges and penalties that might apply. Typically, in the UK, your liability is going to be payable by the 31st of January if you have one. As an American in the UK, however, we generally recommend that you pay your liability earlier, before the 31st of December. And I'll explain why in a moment. Now, probably the most interesting part of what I'm going to tell you today is kind of the matters around kind of double taxation and the double tax risk that taxpayers face here. When you're paying tax in two jurisdictions, there is a risk that you're going to pay tax in one and not be able to take a credit for that tax in the other jurisdiction, which wouldn't be a very nice outcome. You know, you could end up paying 45% tax here in the UK, which is our highest marginal rate of tax, and you might end up paying 30 something in the US, and it doesn't leave you much change out of your income, whatever the source of that income might be, because if you can't get a credit, you're going to end up paying over 70% in tax. So let's think of some of the ways to manage that. Well, if you've got a UK tax liability, most of the time, if you're a UK resident, you're going to want to take a credit for the UK tax you pay in your US tax return. Now, in order to be able to do that and match the UK tax to your US tax return, it's usually important to pay the UK tax in the same year that the income will be taxed in the US. So if you receive income which will be reported, for example, in the year end December 2024, that's going to fall in the UK's tax return for the year to 5 April 25. Even though for UK purposes, the tax isn't payable until January in most of the time, we would recommend you've identified the liability and paid the tax before the 31st of December, so that you can match the credit to your US tax return. If you're unable to do that and you're late, there are opportunities to carry back up to 1 year. If you weren't aware, you've just arrived, you didn't get advice, you get it wrong in year one, we can help you fix that. But you want to avoid that problem, because it means having to have conversations with the IRS. You're asking them for money back. It's much easier to get things right in the first place. So that's key, is to pay the tax in the UK in the same year that you report the income in the US. The other thing to bear in mind is that the UK and the US have a comprehensive double tax agreement in place. Typically, once you're UK resident, the UK is going to have the primary taxing right over all of your income. So you will pay tax here, and the US are forced to give a credit for the taxes that you've paid in the UK. That's the main kind of method of avoiding double taxation on your income. So the UK will have the primary taxing right under the treaty. In your US return, it's very important that whoever prepares your tax return is aware that you need to treaty resource in your tax return. US tax preparers great with domestic rules, but they're not very, very international focused at all. They can be very parochial. They will try and argue that US income should be treated as US income, and you can't take a foreign tax credit against it. That's absolute rubbish. They need to probably be shown how to treat a resource effectively. You pretend in your US tax return that your US income is foreign income, and that allows you to take a credit for the UK tax. If your US tax preparer can't do that, you need to speak to a specialist like us, and we can help you do that and avoid double taxation. One other thing I mentioned earlier is getting the right investment advice. Tax treatment in the UK on certain investments is different to tax treatment in the US on certain investments. Things like US mutual funds can cause a problem in the UK. That's because US mutual funds might be taxed at income tax rates in the UK, lower rates of capital gains taxed in the US, which creates a tax differential that you want to avoid. It's just one example. There are many pitfalls like that, so you need good investment advice. Yeah, so some of the complications we come across with Americans in the UK, the types of income and double tax issues that arise. If we look at the treaty and we think about pension income, so if you're retired, you're returning to the UK, you've got US pension income. Social security from the States is only taxable in the UK. You shouldn't pay any tax on it in the US. It's exempt in the US under the UK-US treaty and should only be taxed here. It's very important to get that right and to avoid double taxation on your social security. Pensions generally, pension income should be, other than social security, would be taxed in the UK, and then you would take a credit for the UK tax in your US tax return. The only exception to that is with lump sums received from your pensions. Lump sums will only be subject to tax in the country in which the pension scheme is based. So a UK lump sum is only taxable here, vice versa. The one other thing to bear in mind, if you have Roth IRA pensions, which have tax exempt status in the US, the UK will recognise the same tax exempt status in the UK. Again, that's all outlined in the treaty. Other things to bear in mind, employment income. If you're moving to the UK, but you're still working for a US employer, you need to take advice to avoid paying US tax on your employment income. Because if you're performing the duties here, you should be paying the tax in the UK and probably taking a credit in the US or claiming something called foreign earned income exclusion in the US on your tax return. But it's very important, just because it's a US employer, don't think that you have to pay US tax on that income if you're performing all of the duties here. Other things, capital gains, the taxable here, not in the US. The US have to give a credit for the capital gains, even if it's US stocks. The only exception to that would be real estate. So wherever real estate is located, that country would typically retain the taxing right, and you'll be allowed to take a credit in the home country. There are a few of the highlights. I could talk for hours, Alice, but I won't. I will now pass the baton to
Fantastic.
you and Amy, but I hope that was helpful.
That was great. Thank you so much, Jamie.